Hello everyone, good morning and welcome to today's morning report analysis videos with me, Richard Perry, market analyst at Hantec Markets on Tuesday the 11th of April. We've got a slightly mixed outlook really on the markets. There was sort of a safe haven shift that's just being seen today. You've got the yen that's outperforming, gold is up, you've got treasury yields which are also performing, falling. And also looking at some of these charts here, you can see these treasury yields, 2-year falling away, the 10-year also falling back, and look at the VIX. VIX volatility is pulling higher. Now this is coming as these geopolitical tensions are ramping up surrounding Syria, how the US is going to deal with Syria, how the US is going to deal with Russia's response to the US dealing with Syria, and also the conflict potentially developing conflict in the North Korean peninsula, the Korean peninsula, with the US putting warships in the waters off Korean peninsula. So it's interesting that the markets are taking a bit of a safe haven view of this, and that slightly is just dragging sort of a little bit the dollar lower. Only marginally really, and as I said, that VIX volatility is interesting because that suggests that traders are beginning to sort of put more into portfolio protection, into buying puts on their S&P 500 options. So that's interesting. Suggests a little bit of stress potentially in equity markets. So watch out for that. You do have a marginal safe haven move and a marginal risk off on equities, but nothing too significant. The DAX is lower. FTSE is though higher, so FTSE is outperforming, but generally speaking, very slightly off on equities. But generally speaking, we're not really showing too much direction other than that. Across the Forex majors, there's very little real direction happening other than that Japanese yen outperformance. You've had UK inflation just out just now. I'll show you those numbers because we've had a very slight miss to the downside actually on UK inflation, whereby the core CPI just dropped to 1.8%, minus 0.1% from the 1.9% that the market had been expecting. Headline was in line with expectation at 2.3%, and it's interesting that we've got PPI input prices which are remaining strong at 17.9%. But let me show you how that all sort of affects the charts. You've got CPI which is sort of flattened off around 2.3%. That core CPI just down to 1.8%, and the PPI just mildly lower, but still very high levels. But it'll be interesting to see if that turns into a bit of a trend. The headline miss at the headline in line with expectations at 2.3% is interesting, but very marginal gains that we've seen on sterling coming through on the back of that, about 20 ticks higher on the day, but we're also looking out for the German ZEW economic sentiment, which is expected to rise to 14.0, which again would be sort of 6 months of positive numbers, which reflects there's a positive correlation between ZEW and German growth, so that would be positive for the euro if that were to be beaten. We're then looking at the JOLTS this afternoon. The US JOLTS is really the only economic data for the States to really get all that interested in line basically with last month at 5.66 million. So let's head into my chart today, which is silver. Now silver has formed a pretty strong, that's not silver is it, sorry. Silver has formed a pretty big bearish engulfing candle. That was on Friday last week, and we're still sort of running the legacy of that, and you see the impact that's had on the momentum indicators. Sell signal confirmed on the stochastics. MACD lines are looking ready to cross over. RSI has sort of lost traction as well, moving into more of a corrective phase potentially. Now it's interesting that this has happened around the 50% fib retracement. If you sort of zoom out here, you can see that sort of bear run from sort of June up until December, recovered to the 50% level, again recovered to the 50% level, hit the 23.6% level, bounced, hit resistance at 50% off. Now this is interesting because yesterday it pretty much hit 38.2% and found support. So is that a level? That is a level of support near term, but I think that level is going to be, with bearing in mind that you've got this bearish engulfing candle, I think that level is going to come under further pressure to the downside. So that is your support that could come under pressure. But also look here on the hourly chart. You've seen this breakdown below $20, which had been supportive along that pivot line, and is now the basis of resistance. So rallies towards that $20 area, $18 seems to be that being a basis of resistance, and could now be that unwinding move that we've seen overnight is sold into. Look at these momentum indicators, MACD lines unwinding back to neutral, just beginning to lose a bit of way. RSI back towards that 50 level, again starting to sort of peter out. Stochastics already falling, so I think around that $18 mark on silver seems to be a basis where the market is sort of struggling to get over, and having sort of completed a sort of mini top pattern, I think you could probably call that. I mean, I suppose you could arguably measure 1840, so it's about 40 cents, almost just over 2% of downside back towards 1760 area is perfectly possible, and again that would be suggestive that we're going to retest that 38.2% fib level around 1770. And yeah, that's I think we're going to see a bit more of a corrective move. But you've also got a medium-term pivot around this sort of 1725 area. Old support became resistance, and I think that is a mark that the market is sort of looking out for. So if you sort of break below that 1770 level, then you're certainly looking at probably a test of that pivot line again. But with these momentum indicators tailing off, I think this is possibly a move that could be sold into this little rally that we've seen overnight. So I wish you good luck in your trading today, and I will speak to you later. Thank you.